Welcome to Personal Finance 101. Today's show, we're going to talk about mortgage forbearance. What is mortgage forbearance? When did it start? When did it end? We're going to talk about the CARES Act. What is it? Why did they come up with it? We're going to explain to you at the end of the CARES Act mortgage forbearance, what are the choices a homeowner has? What are the obligations that a loan servicer or a mortgage company has in regards to that person's mortgage? What negotiation can they do? What are the different options the homeowner has? All this we'll cover today in our show about mortgage forbearance. My name is Franz. I have a master in business administration. I'm a real estate broker for First Home Realty and Investment Corporation. Today, we're going to talk about mortgage forbearance. As usual, we always ask you to like, to share, to comment the show with all your network and all the others that you may think that can benefit for that program that we have. Personal Finance 101 is a show where we talk about investment, where we talk about retirement, where we talk about real estate and mortgage. My name is Franz. Thank you so much for watching us. Today's show, we're going to talk about mortgage forbearance. What is mortgage forbearance? Mortgage forbearance is when a homeowner, when you have a mortgage in your house, of course, are in difficulty, are having what they call financial hardship. And at that time, you're allowed to call your mortgage company or your loan servicer, which is the person that sent you a mortgage statement every month. Because sometimes you may have a closing and you had a mortgage company and that company goes and sell the mortgage to someone else. So that someone else is called a loan servicer. That's the person that sent you a mortgage statement every month to your house. That company, if you have a financial hardship, you reach out to them and tell them you would like to have a mortgage forbearance, which is basically a pause on your mortgage payment till a certain time. Either they reduce the payment or they put a pause to it. So that means you don't pay anything for a certain X period of time. Last year, because of COVID-19, the federal government created an act that they call the CARES Act, C-A-R-E-S Act. That means the Coronavirus Aid, Relief, and Economic Security Act. And they signed it as a law in March 2020. At that time, if a homeowner had financial hardship, problem receiving income, problem with COVID-19, you reach out to your loan servicer and you tell them, I would like to apply for a mortgage forbearance. At that time, they can give you 3 months to 12 months mortgage forbearance. They were obligated to tell you yes, just because of the CARES Act. In the past, if you call a bank and you said you have a hardship, they will have to analyze, study, asking you a bunch of questions. Have you sent papers, letters, and all that in order for them to approve it? But with the CARES Act, the financial institution were obligated to give you the mortgage forbearance. And you get it from 3 months to 12 months, finishing in March 2021. Then at that time, the federal government extended it for another 6 months till September 30th, 2021. Meaning if you started in April 1st, 2020, you will get 18 months of mortgage forbearance, either zero payment or reduced payment. At the end of the mortgage forbearance, which is at the end of September, which is September 30, 2021, depends on what time you're listening to this show, the federal government decided to all the loan servicers need to reach out to their borrowers, to their mortgage holders, to their homeowners, and tell them, give them different options, because this is the end of the mortgage forbearance. So we're going to give you an example, right? Let's say your mortgage payment was $2,500 a month. And let's say you had a mortgage forbearance for 18 months. So $2,500 a month times 18, that gives you $45,000. Now imagine You spent 18 months and you don't pay a dime on your mortgage. Now you owe the bank your mortgage balance, let's say it was $200,000, plus the $45,000 that you never paid for 18 months. That money, I guarantee you, won't be deleted. The bank cannot just go and take an eraser and erase the $45,000 for you. You have to repay that $45,000. And depending on which type of loan that you have, there's a way for you to waive, reduce, eliminate, pay off that $45,000. There are different types of loans. There's a Fannie Mae, Freddie Mac type of loans. There's FHA type of loan. There's also USDA loans, VA loans. There are different types. In our show today, we're going to talk about Freddie Mac and Fannie Mae loans, and we're going to talk about FHA loans, which is Federal Housing Authority loans. And the Fannie Mae, Freddie Mac loans, they give you three options. The bank or the loan servicer tells you, okay, you got one option where you keep your payment the way it is today, which is $2,500. Starting October 1st, you're going to pay $2,500 every month. Well, that's what you were paying before. What is the change? The change is the $45,000 that you owe will become as a balloon payment. Meaning, let's say you have 10 years left in your mortgage, you're going to keep paying the $2,500 as usual, and at the end of the 10 year, you will owe $45,000 as a balloon. If you refinance, you can pay off that $45,000 and put it in a new mortgage. Or if you sell the house, you're going to have the obligation to pay the $45,000, which is basically you owe the bank $245,000. The $200,000 that you owe in your mortgage earlier, and the $45,000 that you didn't pay for those 18 months. Option 2, you can reduce your payment. How can you do that? The same loan servicer is offering you a loan modification. What does that mean? That means, let's say you got 10 years left in your mortgage. They offer you a 30-year new mortgage with a lower interest rate, just because the interest rates are low these days. So that means if today, let's say you purchased your house years ago and you never refinance, you may have a 5% interest rate or a 6% interest rate. Today's rate, they can offer you a 3% interest rate or lower. That will reduce your monthly payment. So your $2,500 may come today $1,500. There are disadvantages on that. The disadvantages are, instead of you having 10 years left in your mortgage, now you're going to have 30 years left to pay it off. Instead of you paying X amount of dollars, you will pay much money for that. And also, the loan modification has closing cost. So that means instead of you owing the bank $200,000, the original mortgage, plus $45,000, which is the 18 months you didn't pay, plus closing costs. Let's say the closing costs are $12,000. You got $200,000 plus $45,000, that's $245,000, plus 12, that's $257,000 is your new mortgage balance. Because you take a longer term, 30 years, and a lower rate, your payment will drop significantly. That was the second option. Now, the third option is you take your balance of $45,000 and the bank spread it for you in different payments. Meaning, the bank can say, okay, I'm going to spread the $45,000 for you in 45 months. So it's going to be $1,000 every month. Instead of you paying $2,500 a month, you will pay now $2,500 plus $1,000 for the $45,000. So that will give you $3,500 every month. Option 1, your payments stay the same. Option 2, your payment drop with, of course, consequences. There's advantages and disadvantages. And option 3, your payment go higher, but you pay off the balance quicker. If you really had hardship, it's going to be a problem for you. But today, if the hardship is finished, your situation is better, you may be able to afford payments. And at that time, it's only up to you to decide which is better for you. Nobody else can decide it. We can give you options, we can discuss it, we can talk to you about it. A lot of my customers call me and we discuss about it. Every situation is different. For certain people, option 1 may be better. For others, option 2 is better. For other people, option 3 may be a better choice. It depends on your situation. There is no clean cut. There is no one size fits all. We need to talk about it, discuss it, and see which situation will be better for you. You're listening to Personal Finance 101. My name is Franz. This show is sponsored by 2 companies. First Home Realty and Investment Corporation, which is my brokerage firm. If you're looking for buying, selling real estate, if you need advice on buying real estate, if you're an investor and you want to purchase big property, you need 50, 60, 100, 200, 300 units, we can give you a consultation. We can help you figure out certain things. We can play with the numbers for you and explain to you how to invest whatever amount of money that you have. Second company is our sponsor here is Progressive Tutoring. If your kids need help, if their grades is not as you would like them to be, and you want professional tutors, professional certified teachers to help them, Progressive Tutoring is your company. Give them a call, give them a chance, talk to them, and they'll be able to help your kids achieve better grades. You're listening to Personal Finance 101. My name is Franz, and today's show we covered mortgage forbearance, part of the CARES Act, the Coronavirus Aid Relief and Economic Security Act that was voted in March 2020, specifically because of the coronavirus of 2019. For the COVID-19. And in the mortgage forbearance, your loan servicer has the right to either pause your mortgage or give you a reduction on your payment to facilitate everybody that had a financial hardship. Some people apply for the COVID-19, the CARES Act hardship financial, and they didn't have a hardship. And these people get to a bad habit now of not paying their mortgage payment. And today, it will be difficult for them to start again and start paying that mortgage. They're looking for the money, they don't know what happened to it. If you didn't have a hardship, today you are supposed to have $45,000 saved somewhere. If you had a hardship, it's understandable that you don't have the money, and that's why the bank are giving you choices. I hope you enjoy the show. Please share it with all your network. Let people know about Personal Finance 101. Thank you so much. See you then.